Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 25th of February, 2023, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of March, 2023. And if we look across all the three major pairs, they've all suffered a bearish move for last week, especially on the Friday. So which means that the dollar would have broken out higher, and all due to a couple of news triggers, initially with the flash PMIs, which was better than expected, stronger than expected. So that was on Tuesday, and then followed by Friday PCE price index, which came out slightly higher than expected, which would trigger the Fed for additional rate hikes, since they are watching the PCE price index closely. So this could be a concern, as this could extend the rate hike for 3 more rounds instead of just 2 and a pause. So all suffered badly on the Friday, just yesterday. Let's start off with the Euro. And after finding support from the daily 55 EMA, fell through on the Tuesday and then continued lower until it hit the daily 200 EMA. That's yesterday on Friday. So it's threatening to test the support at the 105, failing to break out higher above the 107. So let's move this now right back up here to the 107 as an interim resistance. And support is still at the 105, along with this swing high, previous swing high here. That's at the 100th here. That's just below the 105 at the 104.80 area. And we'll see whether that will hold next week. If it does break this support, that's going to be a concern, as then it's likely going to extend the move down to the next fifth level at the 78.6, which is at 103.20 area. So move this for now. That's this is the next key resistance at the 138.5 extension. All right. So the Eurozone, there's only minor news at with the CPI flash estimates, and then a couple of ISM figures for the US, but the main one will be on Friday with the services PMI, which already showed from last week's flash estimates that they were coming out higher than expected. So that's going to be a concern for the other major pairs, and will be a boost for the US dollar. All right, so on the weekly time frame, this should be quite a bearish close for the week, and it is. And breaking below the weekly 55 EMA, attempting to target the 105, and yes, next support is going to be the next fib area with these previous swing lows here. Okay, so we'll compare this with the US dollar index, the DXY, and to see whether that has broken out higher as inverse relationship. And this is the US dollar index, the DXY, where You can see that the inverse relation did take place with the bullish move on the US dollar, and especially on the Friday where the PCE price index figure came out higher than expected, causing concern on further rate hikes. And breaking through the daily 200 EMA here, as well as the 78.6 big retracement of this recent swing move down. So that has broken through higher and almost reaching the resistance zone at the 105, just 10 points below that. So we can move this into interim support here now, just above the 62 Fib retracement, and the daily 55 EMA is coming up too. So let's move this one out, and we'll move this into the 103. Let's expand this a bit more. So 103 now, and the 50 Fib will be the major support zone. Now it does break through the 105 and the recent swing high at 105.36. Then it's likely to continue grind its way back up to the 138 Fib extension at 107.20 area, which is close to this swing high area, previous swing high. But it does need to break above this recent swing high to the next swing high before targeting this area at 107. So still some way to go, and it could if it's still a bullish trend, and it could take a couple more weeks to attempt to reach the 138 Fib extension. And if we start from this swing high here, it has just reached the 62 Fib retracement. So this is also a valid move, and then I was going to try to get up to the 106 and eventually to the 107 plus area. For now, we'll leave it as such at this recent swing high, trying to retest it at 105.36. Okay, we'll see whether these two news events is sufficient. We'll need to wait for the following week with the non-farm payroll report as well. All right, but for now, there's definitely a bullish recovery for the US dollar. Okay, so let's move back to the other major pairs. And let's move on to the cable, where the cable managed to prevent the drop on the Tuesday with the better expected US ISM figures, ISM flash estimates, and that's due to their own flash estimates, which was also stronger than expected. So they managed to hold on, but just for the day, and then after testing the resistance at the daily 200 EMA, also fell back lower, and then joined the rest as they weaken against the US dollar. So it's attempting to test the 38-Fib retracement. And if that does break, then it's going to head down to the 50-Fib retracement levels. That's the neckline that we identified previously with this potential double top area. And coming down to test this neckline. If it does break, then it's gonna go test the 50-Fib. But we'll see how strong this support is going to be at the 38-Fib at the 118.65 area. So, but on Friday, it has finally broken below the 120, which has been providing strong support at a psychological round figure. And no major news for the UK this coming week. Just exposed to the US PMIs on the weekly time frame. That's also attempting to drift lower to the previous week's low. And was not able to break out above the 78.6, so has been rejected and falling towards the 38, or rather the 21 Fib here. But it's trying to resist and trying to find some support, but ultimately the US dollar is still winning out. Okay, let's move on to the Aussie dollar. And this week there's also a CPI figure from the Australian economy on Wednesday. And we'll see whether there's also further inflation fears for the Australian economy. But for the Aussie dollar, it was not able to climb back up above the 69 round figure and eventually fell below the interim support of 68 and targeting the 67 now. As the next key support zone. So 69 is now an interim resistance. And along with this area of the daily 200 as well as the daily 55 coming down, that's going to be also the interim resistance area. So 69 could now be a strong resistance. Okay, and if the 78.6 Fib retracement cracks under the pressure, there is this key support zone below that, and that's at the 66.50 area. So that will be the last line of defense. If there's a further bearish momentum, attempting to reach the 66 round figure. So 66 here, and that's the swing low area here. But for now, it's looking quite bearish for the Aussie dollar, and on the weekly time frame, that's a very bearish candle as well. So yes, it's trying to hit the 67, and then halfway through at 66.50 before it attempts to try to reach 66. Okay, so there's if the US news keep showing concerns of inflation and further strong economy of growth, it will add fuel to further inflation, which will worry the Fed even more. So then the US dollar will continue to recover at the expense of the other major pairs and spot gold as well. So do check out my other videos, spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.